over the last trade of the year, December 31st. Trade recap for you guys. So let's hop into it. So coming into market open, we have bearish trend on higher time frame. Sorry. So I'm on the 4-hour, and so right off the bat, I see that we are creating lower highs, lower high, lower high. All right. And so what I see is that we have like these lows, these internal lows. And so it looks like the market is just kind of just chopping around right here on the higher time frame. And so what I want to see is for price to kind of take out this low, and then maybe come back down into here before swinging back up. And so we already saw market take out this high right here. It swept out liquidity and then failed to take out the high again, which led into the breakdown of structure. Once we reclaimed this area over here, we were able to come back up. We reclaimed this 4-hour gap right here. I'm on the 4-hour time frame, so we reclaimed this 4-hour gap right here. And we broke up. We were unable to, again, retrace the high, and so we are breaking back down. And so where did I find a trade? So we are breaking down. We broke below this 4-hour gap right here. We broke below, and then the next thing we did was there was this sort of order block deal that we broke below, so that's more confirmation that we're going lower. Again, there's another 4-hour gap right here that we again broke below. We retested it once, twice, 3 times, 4 times, 5 times, 6 times. Failed to break above, which then we broke below. We then traded back into the new week opening gap and then broke below. We closed below with this doji, which I guess you can count it. And then right here at 3 a.m. was kind of a candle close, big candle close with the wick above. So this wick above tells me that there's this 4-hour gap right here that price was trying to reclaim back above this new week opening gap, because this right here isn't really like a full close. You can see there's still this room right here. And so what I do is I still count this as room needing to be filled in the new week opening gap. And so we broke below, held below, closed below. Price tried to reclaim going back above the new week opening gap, but we closed below this 4-hour gap. So therefore, we're bearish on the day, in my opinion. And so then what I'll do is I'll just like mark this sort of area. Okay, good enough. Okay. Then jumping down into the 1-hour, are there any 1-hour gaps? There's this one way up here, which kind of coincides with us failing to hold and break above. So what I want to see next is where is market open? And funny enough, this 1-hour gap coincides with a 15-minute gap right here. So market open is right here, 6, 6:15, 6:30. So already we are failing to break above this 15-minute gap right here. We took out liquidity right here. We didn't claim or break above this gap right here, nor did we take out this draw right here. So already coming into market open at 6:15 right here, we're closing bearish or breaking below, and then on the 5-minute, we broke below this gap right here. Boom. Right here, 625, we closed below. So immediately right off the back, I'm thinking shorting, targeting this one, this one, this one, and so forth. These are the draws right here, and blah, blah, blah. So then what I'll do is I'll look for any candle that's 40 points or more that coincides with a fair value gap. I don't believe this one on the 5-minute time frame is 40 points. I think it's like 28 or 32, 36. So then what I have to do is jump over to the 15-minute. 15-minute, we have this one right here. This one is more than 40 points. So we have this gap. And then I had to wait. I had to wait over until right here. We had this close below. It was a little bit of a doji close, so what I did was I hopped over to the 1-minute, went over to the 1-minute, and I waited for price to close below this gap right here. Why? Because there's it's a fair value gap on the 1-minute, and I was waiting for confirmation for price to continue being bearish. So this one was at 630. It was unsure what it wanted to do. Another doji. Then finally we got a big bear candle. So big bear candle. I entered in. Stops at the, let's just see. Yeah, 30-point stop right above the break of the gap, targeting the lows right there. And so I got in, had a little bit of a retracement, but then obviously with there being so much selling pressure after such a big move up, price just dumped, hitting TP immediately. Not too complicated of a trade. Again, we just start out on the higher time frame. We read the gaps, we read what the market's doing, and then from there we have our bias, and then yeah, see where the candle closes are. So that was it. I mean, I guess I could have held it for TP2 and TP3, TP4, but I was totally fine with what I had going into the end of the year. So that was the trade I took. I think I got 294 on 2 accounts. So on my top step, I have 294 on this one and 294 on this one. These 2 accounts are pretty all over the place because of a lack of inconsistency following my trading rules, but that's a part of becoming successful. You have to learn from your mistakes and become better day after day after day. So that being said, that was the trade I took today, and I'm going to be back at it every day, try to become better. So quick little note for you or whoever's watching is just try to follow these 5 things. If you're trying to become successful, trying to become more consistent, is try to focus on one good trade a day. You don't need to take more than that. As long as you're being patient, staying disciplined, you just need one good trade a day. Second one for me is I'm only looking to take trades from 6:30 to 8:30. Why? Because that's when the market opens, that's when money starts flowing in, and that's when it gives me the best opportunity. The next one is I'm allowing myself, on top of that one trade a day, that is basically a $200 daily risk. $200 daily risk gives me between it's around 3 micro contracts. So 3 contracts going for a 1-to-1. This is a 1 to basically 2. If I would have targeted 1 to 2.5, 1 to 3. So yeah, 2, 4, 6. So $200 to $500. That's with using 3 micros, targeting all that with $200. So one trade, $200. Next one, follow the strategy you know works. Stop jumping around and just keep it simple. Last one is don't oversize. When you oversize, you're over risking, and it's not what your strategy calls for. So follow what works, follow what you know, and yeah, basics are the key thing here. So as long as you know that, just keep putting in the work, and yeah, you'll be surprised over the time. But with that being said, I'm gonna peace out. Go enjoy the rest of my day. I guess I gotta go to the gym and gotta go to my actual job. So I'll catch you guys in the next one, and enjoy the new year. Later.